get cracking. Firstly, I just want to do the usual thanks and appreciation to our sponsors, and they are from your left to right: Veritas, the broking firm; Thiess, the mighty engineering and contracting firm; Fender Geophysics; Taurus Funds; Inversia; Broken Hill Mines, our major sponsors, BDA and AME, who've been amazing for so long. Really appreciate those guys too. And CRE, which is a mining specialised insurance company, if you have any needs. Great guys. Ioneer, we know Bernie Rowe and spoke to him yesterday. His project is a lithium project in Nevada. Kingsgate, the Thailand gold company, which has been around Sydney for a long time, and great guys. RFC Ambrian, the venture capital fund and advisors. AMEC, Association of Mining and Exploration Companies, and APM Graphics. Yeah, look, when you thank them in person, better still give them your business. They make the world go round for us, and we very much appreciate our sponsors. A little bit of, before we get going with the show, I wrote a little comment in the Australian newspaper, and does anyone ever fill in the Fraser Institute survey around the room? Yeah. It's well, if you don't, do. It's how we tell the world what our problems are with the jurisdictions that we're exploring and working in. Last survey, they've just opened up for this year. So they're going out and asking for, you go through quite a lengthy survey, but it's worth doing, and it's from leaders, mining leaders from around the world doing it. I was just having a look at last year's, and this has been out for some time, but it's, they give these, there's a chart that's called investment attractiveness, which you can see there's two columns of ratings here, and it incorporates about 8 different aspects, from geology to legislation and predictability of government, stability, security, the whole thing. So it's a matrix of factors that add up to rate a particular jurisdiction. And if excuse me, there's an old saying that the level of mineral exploration in a country is a good measure of the nation's future wealth, and nowhere more than in Australia, because mining is our nation's day job. Agriculture is about 1/5 the size of mining. What I said was that we're in a situation of red alert with respect to our rankings. Remember, we had Shane Jones. New Zealand is now rated higher than every Australian state, and that was last year. That was before Plibersek and Blaney. It was before the Bowden silver mine, and probably would have included the Queensland coal royalty, which is just obscene. Starting to get some attention again in Canberra now. Western Australia fell from 4th spot, great, best place in the world, to 17th spot. That's largely on Aboriginal land access. Queensland plummeted on the back of that royalty from 13th place to 39th place. They went from up here on that column to the top of the next column. New South Wales fell from place number 30 to place number 61, and that was before Plibersek. And it was joined there by Victoria, unsurprisingly, race to the bottom, PNG. So it shows you, people, we're now rated equally with PNG, and Ecuador. Now, red alert. Tasmania is down at position number 70. That's just about to fall off the bottom of the right-hand column. There's only 80 nations, and they keep company down there with Mali, although I think Mali might be completely left out this year, after they managed to kidnap Terry Houlihan and extort $250 million out of Resolute, so I think they won't be playing next year. So New Zealand is now more attractive than all of those jurisdictions. Red tape, green tape, lawfare, slow and costly traditional owners. All mines deplete eventually, and we need to be finding more. So that's an alarm that we understand. It's very important that you each speak to whoever you can to influence, to show your awareness of that. You can pick it up. Fraser Institute is spelt with an S, Fraser Institute. Get on there and bone up, and you can get all of that data. And it actually dissects why which jurisdiction has fallen and why. And, you know, it's obviously we've had Shane Jones, and it's pretty obvious why New Zealand has rocketed up, because they've just legislated to pass projects through, push it up, you know. And here we are still wallowing in uncertainty. Not a very cheery way to start the evening. But from now on it gets much more interesting and much more upbeat. Rare earths, it's been a word around, you know, we've all heard, oh, China's doing this with rare earths, and a lot of people sling it around the word as if it's a sort of a, you know, some mystery, you know, flubber kind of commodity that no one really knows, but it sounds really important, right? We're starting to get a lot more pointy about, in our knowledge and our wisdom about which projects are good, to understand the science of their extraction and their use. People are starting to connect the fact that we need them for EVs, for drones, for so many applications, for military, of course. And I think that's a much more, you know, before, I really feel uncomfortable with all of these critical mineral offices that have been launched all around the world. It's just an excuse to, because it sounds really critical, right? Well, we've got to have one of those departments, you know. And there are so many critical mineral departments, and it makes light of the reality. But not tonight. Tonight we have 3 great projects, and we'll learn very specifically about the science, about the consumption, and about the recovery and the economics, and to, you know, sort of, you know, you demystify a lot of the stories. The stories are all different. We've chosen 3 that, as we said, they're each one of them is a red hot story, and I feel quite pumped up to hear them all. Now, only thing I didn't do was choose. We didn't toss the coin. Who wants to go first? Okay, Jacob, your hand sort of went half up, did it? You know.
I'm ready, yeah.
All right, he's ready. All right, ladies and gentlemen, Jacob Deysel to present the Critica Limited story and the Mighty Jupiter project in Western Australia. You all good to go?
Yeah, all good, thank you.
And you've been, Jacob's been on a road show, and how many meetings have you had?
About 20, probably.
Since breakfast.
Yeah, well, not today. Well, over the last 5 days.
Anyway, welcome,
Yeah.
and
Thank you very much.
yeah,
Appreciate it.
let it go. Thanks.
Right. So just show me, how do I get this to work?
I don't know stuff like that.
You don't know. Well, let's see. Good. All right. So I've been in a CEO role for Critica for about 6 weeks now, and I think my initial reaction when I was approached by the board of Critica to join as CEO was, when can I start? And I think the reason for that is, I think Critica, and specifically our Jupiter Rare Earth project, presents significant opportunity, but it's really a project that any CEO would like to have in a business. It's got enormous scale, it's got grade, it's got quality, it's got strategic relevance, but more so there's a real exceptional team out there. My name is Jacob Deysel. I'm a mining engineer by background, close to about 25 years. I've operated, built, changed, and turned around multi-metal operations around the globe for about 25 years. And tonight I really want to talk to you about Critica, and specifically the new Critica. So under my leadership, we're rebadging. We're not changing the name, but we are changing what we stand for. We've done a great job at exploration, but we're moving forward, and we're moving this project forward in terms of becoming Australia's next rare earth developer. We've got a significant commercial focus. I've got an excellent technical team, and we've got the technical capability to develop this project and move it forward. So just our normal disclaimer. So I think Julian touched on this piece of rare earths, but let's just talk about that a little bit. There's 17 elements that constitute rare metals. And I think the issue really is that there's really only 4 of these metals that carry about 80 to 90% of the value. So, and those are what's referred to as the magnet rare earths. And they've got weird names. They are neodymium, praseodymium, terbium, and dysprosium. So the first 2 are light magnet rare earths, the last 2 are heavies. They get used, they are really the quiet enablers of modern life and modern technology. They're ubiquitous in our modern technology. If you, everything around us contain magnets. They are not just the magnets that keeps the cupboard doors closed. If you think about the electric vehicles, there will be no electric vehicles unless there's magnets. There's no wind turbines unless there's magnets. These are really important pieces. Robotics is a significant piece. Every joint on a robot is a magnet really that goes into that. We talk a lot about AI, and we talk about let's store our stuff in the cloud. That is not in the air. There's actual real hard pieces of kit there, and that all consumes a lot of these rare earths. The demand in this industry is not cyclical. It is strategic, and it's absolutely structural. But there is a problem, and the problem is China controls 70% of the mining, and China controls 90% of the processing capacity. And this control has become a strategic liability. We've seen to the West this has been weaponized a few times. It happened earlier this year in 2010-11. It happened to Japan, where this supply was just cut off, and this modern technology piece just comes to a grinding halt. And as a result, we see that the West is moving forward to shore up this supply chain. But there's certain projects that's going to get rewarded here, and that's specifically projects that's got scale, that's got the right geology, and that's got a flow sheet that's simple and can work forward. And those kind of things I've just described there is how I would describe Critica and our rare earth asset. Now, there's enormous tailwinds in this industry. Because of that, the West, all the way from the US right through to Australia, is policies are aligning. There's real dollars on the table. We see that OEMs are contracting much, much earlier. And again, it's rewarding projects in a space where they are credible, where they're capable, and they are development ready. And that's what I want to explain tonight is, in a nutshell, how that really sets out Critica and our Jupiter asset. So if I could explain it probably in 3 words, it really comes down to scale. It comes down to simplicity, and it comes down, for me, to speed. Now, in terms of scale, we are the largest rare earth clay hosted and also the highest grade in Australia. That also makes us the largest magnet rare earth resource in Australia. Now, magnet rare earths carry 80 to 90% of the basket value here, so it's extremely, extremely important. From a simplicity point of view, we've got a benefit in the sense that we are a clay-hosted deposit. We're not ionic clay, we are a clay deposit. It allows us to match our geology to very innovative metallurgy. And for those in the mining executives here, you know that if you can reduce your mass very early on after mining, and you can reduce the footprint of the downstream aspects of your processing plant, that's where you get a competitive advantage and edge in terms of both CapEx and OpEx. And we've managed to achieve that, and I'll talk a little bit about that. The other piece about simplicity that's very important is we're very low in uranium and thorium. So uranium and thorium is a problem for this industry. We have exceptional low uranium and thorium in our asset, and therefore this material is very exportable from that perspective. And in terms of speed, under my leadership, we're accelerating. If you go through, last week, we've appointed 2 laboratories, ANSTO and Munitech. They're running 4 processes parallel for us at the moment in terms of producing the next step, which is taking the concentrate we produce and produce what's called a mixed rare earth carbonate. I'll explain that, and that is really the product that we will be selling, and there's a great offtake demand for this product at the moment. in terms of the project itself, if I put this in numbers, just to give you an idea, it's our global resource is 1.8 billion tons. Our cutoff grade on this is 1,000 parts per million. Some of our competitors, that's double the actual grade of some of our competitors out there. So it's just an absolute enormous resource. But if you hone this in on the magnet rare earths, we've got 640 million tons at a cutoff, at an actual grade of about 500 parts per million. This is an exceptional amount of these magnet rare earths that's sitting there. But probably more important is the fact that we have very responsive geology, and we can very early on reduce the mass by about 95%. We upgrade the grade by 800%, and we do this all with very benign stock standard equipment before we go into what is called this leaching process at the back end. So we've got an enormous smaller footprint which this potentially translates to. If you look at the graph there on the left-hand side, it is on the left-hand side, I think, you'll see that we've got two bubbles there. That is our the green bubble and the gray bubble. The green is our the x-axis there is tons, y-axis is the parts per million or the grade, and you can just see this this asset absolutely outshines the competition. Now, scale is not everything, but we also have quality and we've got continuity. So our asset Jupiter is 40 square kilometers. It's very homogeneous. The material is, the mineralization starts 2 to 6 meters below surface. So what this all translates to is very low stripping ratios. It's a clay-hosted mine, so therefore it's bound to be much easier mining than a hard rock type of mine operation. And it's this continuity which gives us constant feed, but more importantly, it gives us predictable processes and very predictable product. And if you're a downstream beneficiator, you want predictable product because that keeps your systems in check and makes sure that you run a constant and don't have to make too many changes to this. But apart from that, Jupiter, our asset, is only 3% of our larger Brothers deposit. Now we're focusing Brothers project, sorry. The Brothers project has a footprint of 1,350 square kilometers. So it's the size of Greater London. There's already 5 other discoveries there. We are focusing our attention on Jupiter because we believe when we get that recipe right, there's enormous scale here, and that gives us potential for further growth, but also selectivity in the process going forward. Now, the geology itself, just briefly, just to talk about this clay-hosted versus ionic. When you have a clay-hosted deposit, what it means is our mineral is contained in the rare earths is contained in minerals within this clay, which allows us to beneficiate up front, reduce the mass before we go into the more intense hydrometallurgy piece. If this, for argument's sake, is ionic clay, I don't have that benefit. I have to take that whole process, although it's more benign in terms of the hydrometallurgy, I still have to take that whole part of material that I mine through hydrometallurgy. So in our instance, if I mine 1 million tons, I drop 95% of that very early in a very, very benign process, and only 5% is what contains the rare earths I'm looking for, and that goes into hydrometallurgy. If I'm ionic clay and I mine 1 million tons, I have to take 1 million tons through hydrometallurgy. That's really how that stacks up. So there's enormous benefit in having a clay type of deposit. Now, to talk a little bit just about the metallurgy itself, the green bar you see there is what we do up front, and this is very stock standard equipment that's been used and very well proven. It's magnetic separation. That magnetic separation pull out some iron and pull out the front section, and then we go into flotation, very standard process, and that allows me to reduce 95% of my mass and concentrate everything into 5%. And it's that 5% that then goes through into the hydrometallurgy piece where I leach out the rare earths that we are looking for. Now, what that potentially will translate into is that if I've got a lower footprint at the back, that's a lower capital intensity. A lower footprint at the back means I use less reagent, I use less water, It's a smaller footprint and therefore less energy, and that should be an OPEX saving for us. And if you link all of that together now with a low uranium and thorium, then you've got quite a significant project here moving forward. So we're quite excited about that. Now, the kind of value catalyst for us where we are, the next step for us is to produce a mixed rare earth carbonate. What that really is we take that 5%, we put that through a leaching process, which takes all the rare earths we want into solution. The material we don't want, the contaminants, don't go into solution, so we remove that, and that's how we clean this up. And that then we crystallize or precipitate that by adding a carbonate. So it's like you adding baking soda to an acid, and it essentially brings it back, and it precipitates out as a mixed rare earth carbonate. And that would be the product that we would be selling. And that's the product that potentially could go to a Lanus, or it could go to Enyaba, or some of the facilities that is available. And because it's low uranium and thorium, it's an easy, accessible, exportable product. Now, we've just appointed 2 labs, Ansto, Munitech. They're running 4 of these processes to produce MREC for us. So that's busy, that's live process at the moment. And then earlier this week, we appointed Gabakir, which is our Vietnamese laboratory partner. They are scaling up the front section for us. So we're taking that and we're going to produce, we'll run through about 3,000 kilograms or 3 tons material through that. That will produce more of the sample for us, which will then go downstream to do more MREC optimization and work for us to move forward. Now, if you have all of that and you link that, if this project is out in the sticks, it's a different piece when it comes to economics. We are actually in a very favorable position. Firstly, we are in Australia, which is fantastic. It's a great ally to the West when it comes to critical mineral production. But secondly, we're in a tier 1 location in WA. We are 250 kilometers from the Geraldton port, which means we can easily get material in and out. We are similar distance basically from our Lucas facility in Enyaba. We're 450 kilometers from Mount Weld, which is Lanus, which is one of the largest producers of this material at the moment. So there's good logistics routes here, which means it makes us, when we move forward to potentially build a project like this, you already have a very light capital outlay because a lot of this infrastructure is available and you piggyback on a lot of that. So we think that's a significant competitive advantage for us. ESG for us goes as a given. Grew up in the Rio Tinto BHP days where this new term came out, ESG, and everyone had to bolt on a lot of checklists and stuff. We don't have to do that. We're developing this from the ground up. We've got a number of specifics that stand out here for us. We're already on a geology. We've got low uranium and thorium. It's very reactive to the point that we can reduce mass very early. We've got a much smaller footprint potentially going further downstream, and therefore all of this will add to a ESG credentials. Now, in terms of how do we commercialize, where do we go? It is early days, but we are already on the radar screen of a lot of downstream partners. We are talking to them at the moment. The next step for us is to produce the mixed rare earth carbonate. That is the product that these downstream off-takers will be looking for. So once we're there, that will allow us then to have some more concrete conversations and also move that forward. But as I said, there's already quite a bit of interest because of the strategic competitive advantages that we have. In terms of where we are, we're fully funded for the metallurgical piece. So moving through this process, the next steps for us is once we've gone to MREC, is to move forward and do a scoping study. So that will put some economics around this. We're very disciplined in terms of our spending. We spend where we move the project forward. We raise when there's real value uplift for us. And then there's significant dollars on the table which governments are making available, which comes in the form of grants. We've already accessed some of those grants, but there is certainly, as we move through these value chains, that we will continue to tap into those, which obviously would make the burden lighter as we move through the process of developing a project like this. Just a bit of a snapshot of who we are. Our ticker is CRI. I think we are repivoting Critica to become an investable brand, an institutional brand. We've got an extremely solid board here, which is very strategic and commercially focused. There's a lot of skin in the game here, and we've got very loyal supporters. We've got that has been, as far as our shareholders are concerned, WGS, Elphinstone's been historically on the list and have been following us. Line Select, and the likes of, have been very supportive in specifically on the rare earth space, and the likes of North Star Impact that is moving forward with us through this process. Now, having all of the competitive advantages is important, but then I've got an exceptional team. As I said, a very strong board, very aligned, commercial focused, strategic. I'm very, very honored to have 3 PhDs reporting to me, so that is sometimes a little bit intimidating, but the important piece is that we've got a team here that understand the geology, being able to make the link from geology to metallurgy, and then making that link to the commercial side. So I think we've got a very strong piece there, and as I said, very privileged to have a strong team like that. In terms of just bringing this to a conclusion, so what are those highlights? Scale, we are the largest rare earth clay-hosted deposit in Australia. We're the largest in terms of these magnet rare earths. In terms of simplicity, we've got the simple geology that I mentioned that links into the flow sheet here, the metallurgy. We've got low uranium and thorium, and we are clay hosted, which is a lot of these aspects add to significance in terms of how you move a project forward. And I think in terms of speed, there's a number of aspects that's live now. There's a number of value catalysts and near-term catalysts that's coming up. So we're very excited in terms of where we are. So I think for me, it's great being in the position. It's about building something meaningful, about building a legacy. I think it's an absolute privilege to be able to build a supply chain. Doing that here in our own Australia is an absolute honor and a privilege. I want to thank you for your time this afternoon. Please follow us. Tim Lindley and myself, our chairman, is here, so happy to have a chat with you afterwards. And thanks to the Sydney Mining Club and Julian for the opportunity. Really appreciate it.
Thank you. We'll take the questions at the other end. I think we'll just flow straight on. Rob, would you like to come and join us? Now, I've got to give Rob's introduction for him. Like a good geologist, he spent too much time in the sunshine, and not today. This is actually the treatment that you get when. So all of well done, all the geologists who go out and weather the elements. He's taken a big. What do they put up there? Oh, there we go. Oh, you did that. Oh, yeah, I recognise that. Yeah, well, yeah. Taken this morning.
Yes.
Anyway, so he's had the treatment, and I commend him for his courage. And when we were talking about it, he said, "Bugger it, the story's so good, I don't care. I'm going to get up and do it anyway." And I think the really nice thing between the last story and this story is both of them will make a concentrate that's low in uranium and thorium. That's different from all the monazite companies. Because obviously once you've done that, you get to pack a lot of dollars into a shipping container, can go anywhere in the world, and it's not, it doesn't trigger what's it, class 7, is that the low level? Yes. I think it doesn't trigger the class 7 thing where you've got to put the nuclear sign on the side of the container when you're shipping it around the world, and it makes a lot of expense. So that's the thing that really struck me about these two stories. They're, and a special segue to join them together. Please make welcome Rob Rutherford.
Thank you, Julian. Thank you. Yeah, end of a 3-week FedEx skin cancer treatment, and yesterday I looked like that. The horns just dropped off, fortunately, for the function. So I'll got that behind me. I'm hoping I'll look better at the end of it once the scale drops off. So sorry you have to look at me, but I've got a hat if you really feel offended. I can drop it on, but then we'll see how we go. Yeah. So yeah, I think we're all pretty familiar, and we got a really good lead into the rare earth market there with all that sort of stuff. It's really just the rare earth space has really got. It's actually kind of unusual, but I seem to have a fair few slides. My slide's different from your slides I got there. Oh, okay. They've put their own little spin on my slide pack, so that's cool. Won't be easy to read. Okay, but basically, yeah, I think the rare earth thing, there's no shortage in demand. I think the demand side of the equation is exponential, potentially driven by not only robotics, as you're seeing in those pictures there, military application. I think we're all on board with all that stuff. So I think the demand side is potentially exponential over the next how many years. But it's the demand side that is got constraints, and those constraints are based on the strategic constraints, and that China's trying to dominate the supply side or dominate that market to build these downstream value add to these products. But also it's constrained side on the mining side. There's not a lot of mines out there that are non-Chinese that can actually build and supply the growing demand. And Iluka, if they were to, they've expanded their plant from probably about 6,000 tonnes to 8,000 tonnes. They've absolutely maxed it out. They've got a heap of capital in there. They can't just suddenly grow and switch that plant on. So there's heaps of capacity for 7 or 8, 9 new Ilukas in the market over the next 5 or 10 years. And we hope that maybe ours is one of them, and some of the ones you're seeing here today could be those ones. And the reason why these ones that we're showing you are more attractive is because there's basically really two types of ore deposits categories, if you like, in the rare earth space at the moment. There's these high temperature sort of complex deposits. They're based on monazites, phosphate minerals, and they're found in carbonatites and mineral sand concentrates. And they require really high capex, and they produce a radiogenic waste, because when you break that monazite down, you've got thorium that you've got to deal with. The other end of the spectrum, and these are the ones that are emerging out of this current boom, are these low temperature leachable type deposits. You've heard of clay-hosted ionic, and meteoric's probably the best example of that. And then you've got these clay-hosted non-ionic ones, and I think we just saw one example of those just now. And then there's this granite-hosted Sybella style, and that's the one I want to run you through here tonight. These are potential for really low capex, low opex projects, but importantly, they don't have any non-radiogenic waste material, so you can transport them around, and there's no issues handling the waste. And so let's get into that a little bit. Our discovery, we made it 2023, I think, was we first put out the first intercepts. It's this giant granite-hosted system. It's 12 kilometres long, 3 kilometres wide, just 20 kilometres southwest of Mount Isa. Excellent infrastructure, gas pipeline just goes through the top of the project. There's a gas power station. There's a huge water supply north of Mount Isa. There's a huge 30,000 people population right next to the project, fly in, fly out. So ticks all the infrastructure aspects of any project. That's the key here, though, is that it's a potential for a heap leach operation, and that's a little different from what we've just seen. Heap leach is basically, and the reason why I guess it can be heap leached is because and this is the key, is that the bulk of the rare earth minerals are these soluble fluorocarbonate minerals. So but the other key important aspect is that it's hosted in a non-acid consuming host rock. So those 2 points right there are the key. soluble ore mineral in a non-acid consuming host rock. So you can pour acid on that rock and it won't interact with the rock, it'll only dissolve the ore mineral. And that enables you to mine some of the lowest grade bulk tonnage mining operations in the world operate in that field. So Morenci, Escondida on copper, they mine down to 0.3 copper, crush it, heap, put acid on it. Rossing uranium is something similar. It's soluble uranium in a lascite or a granite, so the granite doesn't react with the acid. The rare earth mineral, the uranium mineral dissolves. What we've got here is something very similar. It's basically a soluble rare earth mineral in a non-acid consuming granite. That is what we call metallurgical nirvana because it enables you to mine super low grades, bulk tonnage, and you can crush it and stick it on a heap. They're the lowest cost, operating cost for any mining operation in the world. This is what the rock looks like. We've just done some high logging scans on the right there, which enables us to work out the mineralogy quite well down the profile. It's actually weathered granite, which is the base of sap rock. So it's actually still got feldspar and quartz in it. The only thing that's really weathered is the biotite, and that's gone to smectite. The transitional stuff is a bit of a mixture of both, partially weathered, partially fresh. And then the fresh stuff is just a biotite looking granite. It's actually a peralkaline granite, nothing special to look at, coarse K feldspar, quartz, biotite, and calcium plagioclase. The weathering profile is that little bit of weathering that you see in that brown stuff in the weathered is nontronite and montronite, which is a smectitic clay. But the actual the other brown minerals in there are mostly weathered feldspars and quartz. So this stuff has got lots of fractures in the weathered material, so it almost crumbles in your hand when you pick it up. So it's very easy to dig. This is just a little map. We've done a whole lot of drilling since we discovered it in 2023 with our first drilling. We've done a whole series of drilling, which has really formed the basis of our mineral resource estimate. That has come up with about 4.7 billion tonnes of rare earths going just about 300 to 350 ppm and magnetic rare earths. We don't really talk in total rare earths because most of the rest is just waste. You really only get money for these four: neodymium, praseodymium, dysprosium, terbium. So that's really what we're quoting in our resource. The other one, but more importantly, this includes about 780 million tonnes of weathered material in the top 10 to 15 metres. And then underneath that, there's this transitional zone, which probably is double that again. You can see on that cross-section the Carey zone there. That's about 1.5 kilometres wide. And there's also a parallel Templeton zone. The little bit of leaching tests that we've done so far show the Carey zone to be the optimum, so that's probably where we're going to start a lot of our work, the initial startup. We've been using seismic refraction as a bit of a trial, and that maps beautifully the weathering profile. It maps the weathered rock, the transitional weathered rock, and the fresh rock. And this is generally used in engineering for roads, and you can tell whether it's rippable or transitional is not. You've got to drill and blast. But it's been quite a useful little tool. But we've also done comminution tests. We've crushed this rock by the JK Tech in Brisbane. They've got a database of like thousands of crushing tests on rock ore bodies all over Australia, all over the world. And our, no surprise, the weathered granite is classified as very soft. But the thing that actually surprised us, the actual fresh granite being so coarse and so full of feldspar is actually very soft as well. We can actually crush the fresh granite quite easily with very little energy consumption. We did some early tests on it when we first got the rocks before we'd done a lot of the drilling, and we were getting 70 to 80% of the rare earths out using a high pH of about 1.3. We stopped the experiments after 28 days, but they were still leaching when we finished. So we've seen, that was just as our first suck it and see exercise, but that got us excited from seeing that. We've got to come back and do some more bottle roll tests on some more closer up samples. But what we also did when we got the most iron rich and the most alum rich leach that we got out of that experiment, and we tried to then try and see if we could suck a rare earth product out of it and make a precipitant. So we were able to extract a rare earth carbonate, and we got about 50% total rare earths, but more importantly, we've got about 39.5% of that mixed rare earth carbonate product is actually magnetic rare earths. And you can see on that graph that compares our stuff with the Candelaria and or Caldera, I should say, and some of the other clay-hosted deposits, where they're getting around 30%, we're producing a mixed rare earth carbonate with about 39%. So that's a potentially premium product if you want to sell it into a mixed rare earth carbonate market. Likewise, when we compare ourselves to our peers, we're up there with Caldera. Caldera is the clay-hosted ionic deposit in Brazil that's owned by Meteoric. So they have a market cap of around 400 mil. We've got a market cap of 50 mil, and I'll let you do the maths. Basically, since we've done those initial work, we've gone back and done some really detailed work in the Carey zone, which is where we think we'll probably kick off any operation. We've concentrated on that. We've taken the whole bunch of large area composite samples, put a lot of samples into one, and made this big composite. And from 0 to 12, 12 to 24 metres, we've done a series of bottle roll leach tests. And this has enabled us to work out what the optimum acid strength is for leaching this in a heap leach environment. So we want to know what sort of acid do we put on this thing. And what we've found from that, and I'll run you through a batch of slides here just to give you a bit of a quick flick through it, but you'll get the idea. So what we found was we can actually get 70 or 80% of this out using a pH of about 1.7 to 2.5. And that's pretty significant when you bear in mind that lemon juice is pH 2 to 3. We're basically sprinkling lemon juice on a rock and getting 70 or 80% of the rare earths out, and we're crushing it to 10 mil. So pretty handy if there's lemons in the area. But we're also getting 40 to 50% of the heavies out as well, so that's pretty significant as well. And if you look on that pH to 2, the other positive about using the weakest strength acid, pH 2 to 2.5 particularly, is that we get a really significant drop in the iron impurities in the liquor. So the pregnant liquor now, because we've dropped the acid strength, it's not dissolving as much iron out of the granite, and we're just getting that impurity is virtually not there. We're also seeing the same with aluminium. The weaker the acid strength we use, the weaker the aluminium that we get into the liquor. But also the benefit of using a weaker acid strength is also you get less acid consumption. So our acid consumption drops dramatically to about $10 or $15 a kilo, which is really, really, really low. And these things impact on the economics significantly. The impurity levels generally drop away to virtually nothing with you use a weaker acid. But one of the neat little things that we found when we did this work was, as we ran the experiments over time, after about 28 days, the iron started oxidising and we were precipitating goethite in the heap. And that is interesting because now suddenly all our iron is stripping out of the heap. And that has a few implications. One of the implications is that we can recycle the liquor back through the heap and let the pH come down and purify it in the heap. So we don't have any post-purification costs. And the other one is that we may be able to aerate the heap to really induce that oxidation and strip the iron out. So that way we're getting rid of a lot of the impurities in the heap. So what we did is developed an economic model for this deposit. We used pretty aggressive high-cost acid consumption costs, but we applied that financial model to all the outcomes from all the different experiments that we did. And at the end of that, we get this break-even cost, and that's how we work out which is the optimum experimental result in terms of the leaching. And what that shows in this graph quite clearly is that at pH sort of 1.7 to 2.5, the break-even cost is extremely low. At a higher acid strength, you dissolve a lot more, you get a lot more rare earths, but you get a lot more iron and aluminium, so that trade-off is negative. At the other end, when you use really weak acid, pH strength around 3, you're not dissolving as much rare earths. You're not getting any iron or aluminium, but you're not getting any rare earths, so the economic benefit is less. So with this economic break-even number with this financial model that we've got for the deposit, enables us to show pretty clearly that we should be looking in that pH of 1.7 to 2.5. So that's the acid strength that we're now going to use on our bottle rolls. But I guess this is the one little thing that I should show you, is that the Department of Defence just put a floor price on the rare earths for non-Chinese supply of rare earths. That's a pretty significant thing, because we all feel that the break-even cost for just about every project in the world that's the low-cost projects, probably around $45 to $55 a kilo. Most, so for the US government to put a floor price of $110 a kilo means that a lot of these projects like ours, which are the potentially low-cost, low-capex projects, have a real opportunity to go. So if you want to, it basically is telling the rest of the world, if you want non-Chinese supply of rare earths, you've got to give $110 a kilo NdPr pricing. And that's probably where the price is heading towards. It's currently up around 80. So I think we're on our way. I haven't put any cost data on that curve, because on that graph, because I'm not allowed to, probably from the ASX's point of view. But if I was to draw a line, it's probably up there. Is 110 is up there somewhere, up in that top bag. So I can't. I'm suitably shaking enough so you can't really see where it is, but it's up there somewhere. So this is extremely profitable at $110 a kilo, if that is the new price for rare earths going forward. So that said, what are we doing next? Well, we did 9 diamond holes into the Carey zone, which is where we think we'll kick this thing off. We've just done a whole lot of spectral logging on that core, which has been really, really useful in terms of breaking out the weathering profile and working out what's going on. And then we've used those boundaries now to categorise where we'll crush and where we'll leach. And we got a little bit of about a 6-week to 2-month delay, because the device broke down, and we're getting it for free from the Geological Survey, so we weren't going to complain. But it's delayed things a little bit. But that JK Tech should be crushing in the next couple of weeks, the cores, and we're getting a whole lot of comminution data from that. And then we'll start leaching probably by the end of this month. So the Carey zone stuff is the leaching that we're doing, we're pretty much where we did those large area bottle roll tests. We've done a whole lot of mapping to the southeast and expanded that Carey zone well off to the southeast as well. We're going to be doing bottle rolls, leach tests, but we're also going to be doing it on 10 and 20 mil fraction sizes. We're going to do a whole bunch of geotech columns as well, because there you've got to, after you've leached these columns, then you've got to put some aside for geotech work. And then we also do some aeration trials, because we think there's some opportunity there. That's what's going to happen. Those results will probably come out probably towards the end of this year. By the time leaching normally takes about 90 days or more. And we were hoping at that point we may start to see some sort of re-rate in our price, because, like I said, Meteoric and Meteoric's got a market cap of about 350 mil, and Linus has got one of 13.2 bill. So I think if we're close, if we can show that we're at least up there with Meteoric, we should be somewhere touching around their market cap if it's a fair world out there. I think that's it. I don't quite know what happened to my slide format, but it's completely went bodgy with your. I don't know. All my slide presentation went completely AWOL. It doesn't look anything like that on in my original deck. I don't know what happened with that transition there, Julian.
Nice job. Yeah, thanks, mate. So you can see what intriguing stories these are. We've got these massive chemistry sets going on with Linus. Iluka's going to build one. Huge scale, and you've got these very alternative. The thing with these new commodities is too, where there's no history or there's a short history in terms of discovery and development and metallurgical process. You think of copper goes right back to the Roman times, and there's been discovery of electricity and porphyries, but it's all been inside an envelope. And we've seen that with lithium, where lithium came along and then seemed like we're going to need an infinity of lithium, and then suddenly everyone found 2 infinities of lithium. and it all just suddenly shakes out. So this is a really good example of how the really large-scale projects are coming, potentially come right under threat by these very low-cost projects. That's why we put this together tonight, and I think it's a really great little bundle. Yeah, we'll take some questions at the end, but Jason, you're next. So Jason Beckton to tell us the Prospechs story, which is it's a story about way away in the far end of the globe in Finland. So please, good luck, mate.
Thank you. Thank you, everybody, for joining me on a Thursday evening. We'll talk shortly about we'll cover location, people, a little bit. The market's already been covered by my predecessors, so some of that we'll take as read. And we'll talk about a very different asset in terms of where it is on the grade tonnage curve. Just a quick aside, the drill rig there is from Arctic Drilling, known about 10 years, worked with them in Chile. Basically, they've, like everything else in Finland, hence its ranking of #1 in the world. Costs are low, work was efficient. And the key point that I saw in today's Fin about costs, and people wonder why is Finland #1 in the world? It's not just about good people, well-trained, everything gets permitted. It's also about the cost of doing things. Electricity, for example, is on average 7 cents a kilowatt hour, about a fifth of what it is here in Australia, or a sixth of what it is in South Australia and Western Australia. So this is really a low-cost environment, despite all the propaganda. I'm going to make a lot of comments, which hopefully won't be recorded, so look through this. So I think the market comments, and there's some odd video insert there. But anyway, that's good, it's not me. The market comments about price I like because I saw it 20 years ago with respect to uranium. Everyone's beholden to this fake spot market that the Chinese have contrived. And basically, it looks like I've lost 10 kilos. I'm liking the profile, it's all right. But what I like about what has happened in the United States is this so-called new, but what is really an old concept of long-term contract pricing to break away when people, in this case, a democratic republic in China, try to control the price, which they're succeeding at, of course. When you produce most of something, you should control the price. It's called a monopoly. The European Union will talk about the effectiveness of trying to work on that in a minute, but what you can see in the future is long-term contract pricing. So, sorry, I'll just go back one. I'll try and go forward one. So capital structure, I think that just to dwell, the components of this are people. We'll go on about jurisdiction again in a little bit. Again, there's some formatting issues, but that's all right, because you can see the market cap for this company is different point as well as of our two predecessors, because we're not looking for clay rare earths, we're looking for standard carbonatites. The best market cap I saw today was Linus, another carbonatite deposit. What we do have is a well-curated company in terms of the share register here in Sydney. I've worked with this group for over 20 years, since the Bolnisi days. We'll talk about that in a minute. But on the left, you can see the community members of the Korsnäs, Finland area, all, of course, English-speaking, Swedish-speaking. They're all pro the mine. When I gave a presentation to the municipal community on March 20, the comment from the entire council was, let's get the mine going again. It was a lead mine, I'll hasten to add, and we'll get to that in a minute, and why the opportunity lies herein. So I've never worked in an easier jurisdiction, to be honest. I've been in this business for 30 years. Board composition, I'll dwell a little bit on this because it goes to, everyone says we've got the best team, etc. But the reason this team's assembled is engineering and technical ability. Sure, everyone's got that, I get it. But with us is also a corporate patience that we've seen in the past from Peter Nightingale, who I've worked with 20 years ago at Bolnisi, and Tom Mann as well. We have the reason I took this asset to this group back in 2014, so I hesitate to say how long I've been the MD. We heard earlier 6 weeks. I've been, over 10 years. And really what we're seeing now is after a gold-silver false start, we're getting into a bit of a downward slope or upward slope in terms of success because of the asset was basically gifted to us by the government. All the directors here are, well, Stephen Gemmell's here, based here in Sydney as well, and Richard are looking after much larger enterprises such as NIC and A4N. We'll talk a little bit about the EU commitment to rare earths. Of course, everyone's committed to rare earths, even Tasmania is committed to rare earths, but the action in the past has been a difficult one. We've seen, like you see with the Australian grants, a focus on building processing plants when there is no capacity or supply. The issue is supply, and we're part of the solution to that problem. In Finland, obviously building a mine is not easy. You need the low energy costs. The only competitor that Finland has really is Wyoming, and there's a director of a company here that we'll talk to later at under 10 cents kilowatt hour. I know I go on about that, but you can't change some things. You can't change where this deposit is either, which is good. Finland, copper deposits, for example, everyone wants to move them to Chile because they know it'll get processed. When it comes to rare earths, I think the best place to be, and I hasten to say mainland EU, we're not on an island called Greenland where nothing's ever been developed, including high-grade gold deposits. This is a deposit that can be operated and was operated in the past. And we agree with van der Leyen and other EU people in trying to diversify supply. I might take some of this as read. I don't want to fill up your Thursday evening, but basically you've got what was already well covered by my predecessors, and there won't be a test afterwards. Apart from to say Estonia is a processing facility in Europe. Sorry, you can't see that. And we'll dwell a little bit on that at the moment shortly when we look at the map. So there is a full commercial cycle already in Europe that's available. We're not having to invent new technology. Shareholders don't pay us to do that. Nor are we having to build plants. Shareholders don't pay us to do that. Sadly, some of the material has to be used for different consumers, such as military, but more importantly, high-tech demand, of course, as we all know. And again, the recent investment by the government, which some fund managers in London in particular decried, that it's, it's state-owned enterprises, etc. What do you think all the Chinese enterprises are? We're competing shoulder to shoulder now, and that's the way to be. We're seeing some price changes as we discussed. Of course, we talk about NdPr, DyTb. These are the high-grade oxides within the basket. What I like is recent comments from Aluka, for example, that we're seeing a sort of a displacement from what is a contrived spot market that no longer exists, and long-term pricing is the way to go. It's very healthy and it's correct. Things will get built rather than, at the moment, the only way soon, in about 5 years, to get rare earths is to take it out of the Chinese car that you bought. So strategy is always important for a junior company or a major one for that matter. And we talk about size. So in our case, we're obviously at a different grade tonnage point than the two previous talks. The grade in this asset is about 5 to 10 times the average grade of a clay deposit, but about 5 or 50 times less the tonnage. So you're moving a lot less Finland to get the same rare earth oxides. However, obviously it's an underground mining operation, so you balance that out. We do have a precious metals portfolio, which I'll touch on very briefly. However, a lot of shareholders in the company demand that we progress those as well because we control the largest gold-silver caldera in Western Tethyan. The cost of the test, we're doing rare earth test work, we'll see in a minute here in Sydney shortly with ANSTO again, who are the experts in this area, having helped build Mount Weld, as people in the audience are aware of or even contributed to. EU, we have in fact done something that's never happened in my career before, which is secure a government grant for what is a pre-metallurgy project. It was to help us to find a processing way to extract rare earths which already exist in the tailings dam. So it's already broken dirt above ground, and as the mining engineers in the room know, that's a negative strip ratio. I actually lost a bet because I didn't think we would get this grant. There's a lot of effort to apply in the EU, and I said I'd run naked around the tailings dam if we get the grant. and we got it. But, I think it'll be Noosa Surf Club budgie smugglers. It won't be completely naked. The point is, it's very hard to get grants from governments. When I hear junior companies talking about potential grants, they're only for people who are building processing plants. This is actually building up a resource. It's very unusual. Chances of success, we'll go through that in a minute. There's 300 kilogram sample that just arrived in Brisbane, being worked on by core laboratories. We'll then send a concentrate on to ANSTO here in Sydney. And we'll go through what is becoming a more and more interesting asset in Slovakia. So Finland, as you heard, number 1 in the world. We've gone a lot on about costs, but also permitting. Everything's first world. It takes time, but it takes a correct amount of time. We have no foreign staff in country. They're all locals or Slovaks. Very easy place to operate. It's Korsnäs, where near the facility is on the coast, near the major shipping hub of Kokkola to the north, where there's other lithium projects being built by Stillwater, near the city of Vasa. We also have another project, Joki Kangas, which is inland from Oulu, which is close to the new Google data centre. We'll talk about that in a minute. So, yeah, basically mainland EU, and and I hasten to add, we don't have an agreement with Neo Materials, who are just at the finishing touches of their new magnet plant in Estonia at Narva. So it's a full commercial circle, given that things continue and there's no red flags. The one thing, and I usually only remember one thing from presentation that's important here, is that this has already been largely drilled out by a previous company called Outokumpu, who were looking for lead. So they did a very good job initially at the Korsnäs mine, found a large slug of lead, but of course they were clever enough to know they were also finding significant amounts of rare earths, and importantly, low uranium and thorium, as we heard earlier, is important. When we pegged the asset outright, 100%, no partnership for PRS shareholders, I could immediately see this is going to be a rare earth oxide resource. Of course, I don't say the word reserve. We need to do more test work, mainly because the previous reserve and even mined area was 0.7 of 1 million tonnes, or 700,000 tonnes at 3% lead. And then they stored they processed some of the rare earths, but just stored it and capped it. And all of the data suggested it exceeded 1%, as we saw with our resource estimate. It came just over that. I hasten to add, we did do some drilling. We drilled 6 holes of our own to mix new with old, like I've done before, and it passed the JORC test. And we've doubled the resource since last December, and I think we'll double it again this time next year. That's not a speculative comment. You'll see why in a minute. There's other components. There's the hardrock one, which is the main game. There's a tailings storage facility, which is the one where the grant was won off the EU. It's 6,500 ppm rare earths, or a bit over 0.5% rare earths, already broken dirt. Needs more metallurgical work because it's been ground finer. Good percentage of magnetic rare earths, oxides, as we see, over 29%. And all of it published to JORC, all of it on the ASX. There's also a small lanthanide concentrate stockpile. They ran a batch process, Outokumpu, in the early 70s. They were well aware that the fruitless lead exploration effort just kept finding rare earths. We'll see why. But they basically is sitting, that's again, positive profile sitting as a dump, and we're sending that through ANSTO shortly. So there is a near-term production possibility with this asset, which doesn't involve mining, it just involves putting it through a plant, probably a flotation plant. Slightly repetitive slide, but just goes to show that I think the 3 columns or 4 columns to the right are the interesting one. We've already been through the tonnage side of things. There's a lower cut, and of course that's, what's the word? That's have to be very carefully selected what lower cut you select, because we compared it with other assets such as Hastings and Western Australia, hard rock assets, I hasten to add, and not with things that with very high lower cuts, Mountain Pass, things that are operating at the moment, but basically things are being developed in Western Australia, and this is the current resource number, which doubled, as I said, in April. And the exploration target to the right, the first line of the paragraph, that'll basically, and this is what happened between November and April, between the 7 million tonne and the 13 million tonne doubling, well, 96% increase, but that exploration target I fully expect will convert as well. So we'll be pushing, I would say, mid-20s million tonnes, and then from there we just need to keep drilling out along strike in 6 parallel zones. So growth is important. Of course, scale, as I heard earlier, is important for this type of deposit as well. It's before you come to a final investment decision. The grades there I'll take as read, very high grade, higher than anything we've seen in Europe, apart from the metallurgically tough deposits in Sweden. We've got most of the grade, importantly, is in apatite, the more easily processed phosphate at this stage, which is encouraging early work. There is some other, the harder to process allanite, but it doesn't seem to be anywhere near the 10 to 15% concern levels. The one thing to take away this slide is 5 parallel zones, basically all of them test drilled for lead. Then the Outokumpu guy sadly downed tools and left the 491 drill holes in the library facility in southern Finland. We sampled those, about half of those holes so far, to come up with this resource. So what I guess the key point is we didn't have to drill this. Roughly the $16 million worth of diamond drilling was already stored by the Finnish government. We in fact choked their system and had to send half the samples to a contractor in northern Finland to get these numbers out in a timely manner. So we'll continue to report more numbers. We'll do this as well with another project that you'll see in a minute called Jockey Kangas. So it's a jurisdiction that preserves all the core and even protects it from you. I said, can we please have all the core and move it to our facility at the Korsnäs mine? I said, no, because you'll just sample it all and it'll all be gone for the next guys. So the good thing about the Finnish government is they're very strict about how you deal with their material. The bad thing is you can't send it all to the lab. So we get them to do that all for us, and we're very happy with their performance. So I think the key point, I'm not a metallurgist, so I don't want to stray into areas that are difficult in terms of being able to answer questions later. But the key point is we're working on all 3 modules, the hard rock, the big tons, we're working on the tailings dam, and the LNCS, which is the lanthanide concentrate stockpile. And you can see there a rig on the left, operational ease. This was drilled February 2023 in minus 20 degrees. Was drilled out in a week. All the trees were cleared from the tailings dam by the municipality, who sent them to the town to be used in the heating, wood chipping. Then they put more water on the lake to make sure the ice was thick enough, and a certain ice calculation to make sure the rig didn't break through the ice. And it was drilled out in a week, and there was only one expat there for 2 weeks in John Levings, our resource geo. Turnkey sort of operational place to work. And the nearest airport's about 20 minutes away. So another project, we do have the arrogant goal of dominating rare earths in Finland. There's a government deposit, Sokli, we'll talk about later. But the Jockey Kangas we picked up after initial small project. We do surround some non-JORC resources in the middle there, Kontiaho and Katajakangas. And again, it's the same pattern, not as much data, but there's a lot of drill holes unsampled. We just haven't had time to turn our guns to this one yet. We've sampled a few of them, and there was a spike in our share price, if you look at our chart back in April 2023, because of the high hafnium. But there is more allanite in this deposit, so like any company, you have internal rankings. So we'll see how this one fares. It's being worked on right now by mining school Oulu, and they're very happy with the metallurgical process. One issue which is topical is to our south, there's a company called Google who are building a data centre, or as you heard the reason for earlier, why earlier? Because of the price of electricity. There's a nuclear hydro area, and they know that data centres require a lot of that. I don't think it'll impinge on the project. However, we're not about to sit down with the company yet. We deal with the council, and so far so good, no problems at Ottenmaki. I think look for news flow here in terms of consolidating the asset with the resources that we surround, and working hand in hand with, which is a vanadium recycling company that are on our right, who propose at Ottenmaki to produce vanadium from old tailings. It was a hard rock vanadium mine underground for 50 years at Ottenmaki. And I think there's a business there. We'll build that in parallel. Processing capability obviously exists in Finland. Most of the grant money, which I referred to earlier, is being spent in Finland. Oulu Mining School, very good, but also GTK. Won't dwell on that. And these slides I might rip through, Julian, because they're on the gold assets in the east, in Slovakia, well, Central Europe. This was the birth of the company in 2015, where we picked up some gold, epithermal gold-silver assets. As some people know in the room, that's our wheelhouse after the success of Bolnisi in Mexico, where I lived for 4 years, and we built up a 3 million ounce asset that was taken over by Coeur d'Alene for $1 billion, hence the business imperative. My wife, who's in the audience, thank you for coming, from Noosa, has lived in Mexico for 3 years with me. We know the area. This is the exact style of asset. We know how to add value. There's some competitive companies here. It's not ranked on Fraser Institute because you need more than 7 explorers to be ranked. Poland to the north is 33. Slovakia, I don't think it'd be much higher than that. But we have no permitting issues, and this is a project that's not competitive with Finland at the moment. We believe the rare earths is the way to go, but is topical in the belt to the south. In Bosnia-Herzegovina, ADT was taken out recently by Dundee Precious Metals, and you're seeing, again, Chinese influence here with Zijin dominating the Bohr mining complex, which I think I'll be able to just sort of here, and that is definitely a... so if I point there, it works up there, does it? No. Basically, what I like about this asset, again, is geological simplicity, just like coarseness. So what you should see here is some big porphyry numbers soon, but we may not drill them. The paradigm shift, or the big hang on a minute moment here, came when we realised it's basically Emperor or Fiji-style geology, where you have high-grade flatmakes and offsets. So we like it, but the focus, is on the carbonatite. We'd like to see more geophysics done, particularly on what is the surface projection. You see that blue polygon, that is called a low-angle normal fault, or as they'd call it at Emperor, a flatmake. And it's where all the mining production happens. The Rosalia mine, which this tenement surrounds, is all on a low-angle normal fault. So nothing's that unique in geology. And once we got there, we made this breakthrough moment in 2017. And basically, we'd like to see a lot more drilling on this, what is really a mid-tier asset held by a not a nano-cap, a pico-cap, I guess. I heard a nano-cap's 50 million, so that makes us a pico-cap. But basically, what I'm saying is this is a wide-open target, and we're looking at partnerships. We apply high-tech, of course, the LiDAR, which is provided free by forestry. You can see the old historic workings here at Pukenech to the south of the caldera and the epithermals. Again, we're doing the same thing in Finland. All of this data is almost free, and there's no need for us to go to third parties to pick this up. It's all sitting duck, gold, silver stuff. So I think, quickly, to wrap things up and get you back to your evening, coarseness is a already arguably drilled out resource. We need to increase it, obviously, with more drilling. We need to de-risk it with more metallurgy work, which is happening in parallel. The growth of the resource, because these are planar along strike ore bodies, which are geologically simple, they're basically leaning over books, if you like, of repeated carbonatite, should result in further resource growth. Same story, but second off the blocks at Joki Kangas, and Slovakia will see with respect to how it competes for shareholders' funds. You can see the culture of the place with mining up there recently until the 70s. Some of these folks still living, giving us lots of advice. We're hands-on. I'm cutting core there back in August, but we're growing the team. I don't want to repeat. We've already been through this, a slightly repetitive slide, but we're at the right time. We're actually at the supply solution of the so-called supply crisis right in mainland EU, and we're starting to attract the attention of the EU, including being invited to the Premier presentation in Levi in October. This is a conference, if any of you happen to be in Finland, I recommend all the major developers in Finland and Scandinavia for that matter. This is every 2 years, and we're speaking on day one, which is important. It's kind of like the diggers of Scandinavia. A little bit less conditions, a little bit less temperature. And then, of course, we present his family friends at Noosa in November. If you happen to be, let me know. Up that way, it's where I live. And we believe in communicating with shareholders, so there'll be other functions as well. All right, thank you.
We will take, if you stay up here, Jason, we'll get all three speakers up here and take some questions. I don't know about this, if you're a man of your word, saying that you're going to run around the tailing stand with no clothes on and then wearing, what do you reckon? What does your wife reckon?
Yeah, we'll have the camera. I'm waiting for it.
There you go. Look, I think it's pretty hard to get out of, mate.
I don't
You
think
know.
it's a good way to learn Finnish going to jail.
Well, you just have to make provisions, man. You've got to be a man of your word. I mean, shareholders have to trust you. You know.
Jokes aside, I was just aghast that we got a slide of nearly $1 million for an exploration.
Yeah. See, changing the subject.
Propaganda.
Actually, but three great stories, gents. I mean, you know, red hot. So if we've got any questions, very happy to send a mic around the room. Oh, here we go. Of course, Outokumpu, what a great history, and now Outotec. And I remember the guys were at French's Forest there, and they used to have this very unkind joke, which was, what's the closest thing to a fish's arsehole? And the answer was a fin.
They do knock off at 5
So they were the guys who worked there. So just, you know, that was a, anyway, I thought I'd lighten it up. Questions? Yeah, over here.
Jacob, thank you for your talk. First of all, what's the mineralogy of your concentrate? Secondly, you go from 8 times multiplied by 2,000 up to about 1.6%, which is approximately half the cut-off grade of Mountain Pass and Mount Weld. What advantages do you see in Jupiter that will overcome that very low grade compared with the only Western producers of rare earths? And one for Rob, the Fe2 to Fe3 is going to produce acid. Is that going to be a good thing or a bad thing for you?
Yeah, okay. So Jacob, come over here, mate. Yeah.
So no, thank you very much for those questions. I think in terms of distribution, just very briefly, on that slide we had some distributions there, but in terms of the magnet rare earths, as part of the total rare earth, it's about between 23 and 27%, which is those 4 magnets rare earths. And in terms of grade, I think the issue is it's coming down to cost, right? And it's going to come down to capital and OPEX. That's what the difference is. And grade is important, that's right. But the benefit we have, again, here is because it's a clay type of operation, so you do get, it's a relatively easy way to mine this. There's low cost involved here. And you then get that kicker in terms of that very benign upfront beneficiation, which gives you the upgrade of about 800%. And if you look at projects, you know, there's, and I'm not putting any economics on this because we have to work through that process, and that's important. But I mean, any project above 1% TREO is a very strong project in the rare earth space. And if you look at, especially, you know, the comments was made in terms of the floor prices on NdPr, you know, we are seeing these prices moving up, and it's being disconnected from being manipulated in the past, and we're going to see a better economics, and that's going to support these projects. So sitting at a project which is very upfront, very benign process, it gives us a much smaller footprint at the back end here. So from an OPEX, CAPEX, this potentially should be a much more competitive. Link that to the distribution in terms of those magnets, and link that to the prices that we're seeing. We think there's good economics stacking up here. And then, of course, scale. Scale is enormous here in terms of where and where we are located in terms of just being very close to the door of potential off-takers. I think is important for the economics of this project. I hope that answers your question.
What's the mineralogy? That's the original question.
It's a phosphate. It's phosphate-based mineral, so it's fluoronite is probably the main one. Some gersonite, gorsexite. So it's phosphate-based. That's what it is. Yeah.
Thank you.
Okay.
I think it sort of raises an interesting question too about how we compare grades, because we're all, you know, there's a lot of different elements involved and different prices, and now there's a floor price on a couple of those. So how do we quote it? And it's one of the issues that I think we face together in this room is do we need to boil it all down to grams per tonne gold, or what, how do you make an equivalent out of it that you can really say to people that, they can dead reckon the size of the deposit, the grade, the recovery, because at the moment it's, there's a lot of numbers, right? We don't have one of those elements that everyone knows that you can make it all neodymium equivalent, or, so it's something to think about, I think, for, as an industry, that just we go forward, how to standardise, knock it down to numbers, how many million ounces equivalent, probably not a bad reference actually, the gold reference, if you can, in your upgrade, if you go from, you're going from 0.3 gram equivalent up to 4 grams in your upgrade, or, just to give people a handle, because we are in a new business, and most people are still pretty, out there, don't really get, they know the words and they don't really have any penetration, but the certainly would help investors to be able to say that. And, look at the, you could even then, with the heap leach, you could do some very direct comparable heap leach story. Gold, talk about silver bullets. Cyanide's the ultimate silver bullet in the heap leach, and what a great job it does. And, so there's a lot, anyway, that's just a thought. There was another question here. Yeah.
Oh, well, Rob, on the
Okay,
asset.
the other question.
No, you get the other one. You nodded.
You're spot on, Phil. Yes, as the pH went down and the heap oxidised with time, going from Fe2 to Fe3, and the goethite precipitates and generates acid. So we actually strip the impurities out, the iron, and at the same time create acid and continue the rare earth leaching. So it's actually a win-win. That wasn't a question we set up, Phil. That was good.
No Dorothy Dix there. Absolutely, Jason. Before we come, well, hang on. Just hang on. You want to make? Go over here, mate.
So internally we have done a gold equivalent of what this would be worth, but you can't publish it because we don't have a skerrick of gold in the asset, like the basket price, but it's 4 or 5 grams equivalent. But that's because I grew up with gold, and we sort of need that,
done.
but we can't talk about it. We can't write about it.
That wasn't hard to do, was it? Well done. Thank you.
Thanks, Julian.
Very helpful.
Rob,
Thank
a question for you. In your acid consumption charts, the samples were from the transition zone or the weathered zone?
Those bottle rolls we were doing from 0 to 12.
Over here, Rob.
So those bottle rolls that we did were from 0 to 12, 12 to 24. So they actually went from the weathered and the transition zone. So those numbers you were seeing were about the same in both. And so it goes down to about 24 metres below surface.
Thank you.
Oh, one here. Yeah, great. Thank you.
Thanks, everyone, for attending, and obviously our speakers and making the time. My question's for you, Jacob. Critica, obviously, we know it's gone through a name change, Venture Minerals. I know you've only been in the seat for a little while, so I won't go too far into the background, but I'm sure you know Mount Lindsay. It's probably the elephant in the room, but you've come in with a new leadership, a new attitude to it, and like what you've done so far, but it'd be good to hear your strategy in terms of Mount Lindsay, with a lot of money sitting there, rusting, in terms of shareholder value. So I guess, where do you see that asset? Is it going to be used as cash flow? Do you think you may see the price obviously ticking up in the tin and tungsten areas as something to revisit?
Yeah, we'll get. It's funny. We've mentioned this before. One of the tricky things when you go to tell a story, when you're presenting a story, particularly to brokers with a short attention span, the one thing that really kills the presentation is there's only one word. It's the word "and." And they've just got through a story, and then you go, "Oh, and everyone goes, oh shit, I got a whole nother project." And that's the mindset of a broker, because they just have a really clear picture of, if they think of you as a rare earth company, and just there you've got, there's obviously got a great tin asset down in Tassie, but just as a background comment, take it away.
Thanks. That's a very good question. I think in terms of Critica, the Mount Lindsay asset is a strategic asset to us. There's value there, and we've got shareholders that value that asset. We value it. I think our strategy going forward is really focused on the rare earth space. We are solely focused on Jupiter and moving that forward. But there is going to be a time we're watching the market, specifically in terms of the tungsten has been kicking up. We saw that tin, we think it's going to come back again. There's a bit more work that we can do at Mount Lindsay, which is low resource work, and we'll continue with that. And we'll continue to keep a tag on the market in terms of what's the strategic value of that asset and how do we maximize return for our shareholders through that. And that might be potentially, we might sell it. There might be a JV type of arrangement there to develop that further. But at the moment, that is there's some very low level work continuing there to add value to it, but the focus is solely in the rare earth space.
Julian, you were talking about the rare earth gold equivalent. I think that break even. You were talking about that rare earth gold equivalent. I think the break even number that we quoted is the kind of number that people are falling back to because it actually has metallurgical data in it and mining sort of data, cost data in it, because every project is so unique as compared to gold systems.
Yeah, right. I mean,
think
gold is
it's
really
a good number to look at.
It's the one great elegant thing about gold, isn't it? There's cyanide, there's recovery, there's bang out. We know what we're going to. We know what we're going to get. Those yellow bricks. Yeah. That's Now, so it is harder to express a value proposition. Yeah. How are we looking? We might be parking it up there. Look, next month we've got a bit of a tongue twister happening next month. We're presenting two companies at the lunch, and they are magmatic resources and magnetic resources. Magmatic and magnetic. So it'll be a big lunch. Book in, see you along there. But before you go, gentlemen, you will receive your traditional nugget from the Sydney Mining Club. We'll send that to you. And but I just want to, on behalf of everybody here, to thank you for your effort and 3 great stories. And I think they're all going to go ballistic at some point. And good luck to each of you. Thank you very much.